And all right, so everyone, I wanted to thank you guys and welcome everyone for joining us. This is the second in our series of webinars that we're doing. And we kind of entitled them, You Don't Know What You Don't Know. This webinar is actually going to focus on how making a small change can affect or greatly affect your acquisition of customers. My name is Rich Valdez, and I am the Director of Customer Engagement for Confianza. I have a couple housekeeping tasks here. First, if everyone looks like everyone's already done that, but if you don't mind keeping your microphones muted just so that we can eliminate some background noise. Secondly, if you have any questions, we're going to have some time for questions and answers at the end of the chat or of the webinar. But if you do have questions before then, there is a chat window. So if you put them in there, we can address them at the end of this. So that, if you're like me and you forget something, if you put it in there, we'll make sure that we don't miss any questions that come up during the conversation. And then if you feel you have a question that either is not appropriate for this type of audience, or if you have something maybe specific to your company or to, something you just feel might not be appropriate in this environment, please feel free to reach out to us. We can definitely have those conversations in a one-on-one capacity and make sure we schedule something with you that may be more specific to your particular circumstance, your situation, your business model, or something even outside of the insurance world. It could be marketing, could be something else like that, and just different ways to use some of the data that we talk about, or different ways that we use data just to help companies make decisions. So please feel free to reach out to us if you have something that just you feel might not be best addressed in this forum. That being said, I think all the I's are dotted, all the T's are crossed, and so now it's my pleasure to introduce the founder of Confianza, John Petricelli. Sorry, John. JP has been in the industry for over 30 years, and really people know him as Mr. Data, and he's kind of developed that moniker because he's really developed this way of taking traditional data and unconventional data to help businesses really empower themselves to make better decisions by utilizing that data to help monetize and just really make better decisions with data. So that being said, I'd like to introduce JP. JP.
Good afternoon. Thanks. This is the second in a series. Everything we're going to talk about is based experientially on data and analytics that we've performed for carriers and others. And as Richard said, this one is focused really on acquisition, and making a small change in the way you service your agents can have some tremendous benefits. There's an old saying in the industry, commissions on new policies pay for my country club dues, but it's renewals that pay for retirement. So again, we're asked over and over, right, by agents and MGAs, right, how can I write new policies that have a high recurrence of renewal? It's not only something that's important for a carrier, but also important from an agent. They get paid higher commissions on new policies, but it's their renewal book that is the big annuity for them. So we've all realized now, there were about 10 years ago, there was a big move to direct sales of insurance over the internet. Okay, that's your question. There was a big move to sell insurance through the internet in a direct fashion. And with that, everybody was making predictions that the agent was basically going to be non-existent in the next 20 years. What we found is exactly the opposite. And by now we've all realized, right, that the agent, especially the independent agent, isn't going to go away. In fact, they're more vital as this new generation of consumers, right, the millennials and Gen Zs, realize their importance. One interesting fact is we're sitting on the largest transfer of wealth ever seen in this country. Overnight, consumers with minimal insurance needs are rapidly becoming consumers with rather complex needs. For anyone who's ever tried to purchase a policy online, it's not easy, and it takes a lot of understanding. Secondly, consumers demand a better experience. Comparative raters, which were introduced as a way to, in theory, provide a better experience and a better price. That exercise is now failing. We'll talk more about it in a minute. And agents, essentially through that process, agents have been commoditized and thrown in the middle of this failing paradigm. They're now perceived as order takers rather than the customer advocates that they are. One of the things that's really very, very interesting is we collect a lot of survey data in our data stores. And who as a consumer, who do you trust more? Do you trust your banker? Do you trust an investment advisor, broker, or do you trust your insurance agent? And by far, consumers trust their insurance agent. So it's, again, really, it's time for carriers to realize this and be more on the forefront of empowering those agents. So, again, renewal rates are down, and consumer sentiment is near or at an all-time low. I can argue it. I can argue that it's not quite near the bottom yet. And an example we like to use, right? And it's really very akin to the comparative rater marketplace. If you worked at a car dealership and the consumer came in and they're really looking for a sports car, would you show them a minivan? Again, the perception is, you're wasting their time. But these scenarios are all too likely in the insurance industry. And we're going to chat about that. So how did we get here, right? How did we commoditize the agent? First off, the process is totally upside down. An agent really needs to know about the consumer before they can select a carrier. However, they've got to select a carrier to get information from the current information sources, right? The current duopoly. So they're forced to select a carrier prior. And to do that, they're now using a comparative rater and essentially basing everything on price. The agents need information about the consumer right before they can make any meaningful decisions. So the process starts off okay. And for those of you who aren't familiar, there's really 3 steps. The first step is to collect a little bit of information, send it upstream through a comparative rater and get a teaser quote, right? That's essentially known as rate call 1. When they get 5 or 6 quotes back, they again typically take the lowest price. On behalf of the consumer, they then have to log into the carrier system and then ask all the pertinent questions, right? We as Confianza refer to this as kind of the 20 minutes of pain. That's called rate call 2. You collect that information, you get the next quote back. It's still not the final price. And very often, about 60% of the time, it's higher than the teaser quote given in rate call 1. So now the consumer's a little upset at this point. But they've invested the time, they're going to buy the policy because they just don't want to spend any more time. So now we go to rate call 3, where you essentially order the policy. At that point, the carrier orders expensive underwriting reports, loss history, driver history, to get the final quote. About 40% of the time, this is higher than the quote given in rate call 2. And is significantly higher than the initial quote given in rate call 1. I can guarantee you it's never lower. And at this point, the consumer buys the policy because they just don't want to spend any more time. Now, what are you left with? Well, the consumers now invested 40 minutes to an hour of their time. They're frustrated. They've been put off by the appearance of a bait and switch. They will buy the policy. They resent the process, but it's not the carrier they resent. It's the agent they represent. And they resent. And they resent the agent because, after all, isn't it the role of the agent to know the process and the system? Aren't they the experts? Shouldn't they know better, right? And not mislead the consumer along the journey. So what's the small change? At an initial point of contact, have your agent ask the consumer 3 simple questions: name, zip code, date of birth. In a couple of seconds, return to the agent a complete profile of the consumer, the composition of their household, the assets to be insured, an indication of the limits of coverage, whether it's a household or individual policy, and their insurance footprint. This approach will significantly improve the experience because now the agent's Now the agent is informed. Leveraging the capabilities of machine learning, we can help direct the flow and provide a better insight as to who the consumer is. And it's totally non-intrusive.
I'm glad you support me because I actually set up a couple appointments already.
Whoops, I'm not sure what's going on.
Yes, I'm on it. So I mean, you'll see it when we get there, but.
Anyway, this is a totally non-intrusive change and will yield a significant reduction in cost of acquisition because now you're not going through a comparative rater. And as a carrier, you're getting requests for quotes that are commensurate with the policies and the policies and the kinds of policies that you want to rate. Example of a consumer product profile. Again, very small change, details a variety of insurance products that are indicated. And by the way, it's presented and ranked by premium potential. Auto, and again, we give you in terms of premium. So again, if it's a 10-year-old vehicle, single driver, single vehicle, chances are premium's relatively low. If it's a multi-vehicle, multi-person, and there's a luxury vehicle, premium tends to be rather high. Their property footprint, either home ownership or renters and content. Since we know the property and we know the consumer's relationship with the property, we actually will give you and identify the product form, HO3, HO4, which is renters, HO5, which is mobile home, HO8, which is high value. We also know the assets and the investments that a consumer has. So we can also make a determination of the suitability of an umbrella or surplus. We know again, composition of the household, children. So, we can make a determination as potentially there's a life or annuity product. We also know, and again, in this gig economy, large number of these new consumers have small businesses that they run. And again, we can identify what that business is and whether they would need a BOP, a general liability, or potentially commercial auto. So within a couple of seconds, the agent is totally, even though the consumer may have just come in for an auto quote, the agent is now well-versed in all of the products and can now speak intelligently to the consumer about, the consumer's entire needs, often offering a bundling type of a concept to significantly reduce the cost of the consumer and significantly increase the stickiness of the consumer, both to the agent as well as the carrier. So this essentially takes the agent from the role of an order taker to that of a trusted advisor. Again, it opens up a conversation with a consumer about multiple product needs. It's a much stickier client and really does support the agent as a knowledgeable, trusted advisor. We know insurance isn't easy, and the consumer needs to feel secure about what they're buying. Again, this significantly enhances the role and image of the agent. Consumers also need to realize that, the most insurance products are mandated, especially auto. But really what insurance is a means to protect them and their families. And this understanding and in conversation with the agent really helps them take the lowest cost option. Not always, but most times. It basically helps them realize that the lowest cost option is not always the best option. So getting the agent to come to you first, taking this approach as a carrier and offering this, this consumer profile basically will encourage agents to come to your site first. And again, and to bypass. The key is to bypass the comparative rater. The answer is simple. Yes, if you, again, based on our analytics and our conversations, most agents, would prefer to know more about the consumer and will definitely come to you as a carrier first, as long as they have the ability to select another carrier's products based on the determination of the consumer's needs. This is actually good for the carrier because, they, instead of writing policies that they're not going to be happy with and the consumer's not going to be happy with, is better for the consumer and better for the carrier. Again, effectively bypasses the comparative rater. It gives the carrier the ability to pre-screen risks that are not acceptable, and instructing the independent or the agent to go elsewhere, recommend them elsewhere. We foresee that a carrier could even take this one step further. Based on the profile of the consumer, they could even add a rate button to that screen that would automatically take the agent to rate call 3, which results in a way better experience for the consumer and a way better experience for the agent. So, agent loyalty. One of the other things this results in is really a measure for the carrier to determine agent loyalty. Today, it's impossible. With the comparative rater, it's impossible to make a determination as to whether the agent selected you based on price or based on experience. This method basically provides the carrier with a metric they've never had, a measure of an agent's loyalty. So let's take this scenario. If an agent regularly comes to your site to get a profile, but rarely leverages you for the policy, right? Especially those that fit the carrier's risk parameters, go find another agent, right? That revoke their appointment, recruit an agent that wants to enhance their standing and become a trusted advisor, right? Not just an order taker. So, it gives you a direct measure of an agent's loyalty to you as a carrier. So with all, again, you're writing better policies, you're significantly enhancing the consumer experience, you're writing policies that are stickier, both from a carrier as well as an agent. You're bypassing all the excess costs associated with a comparative rater and the very low number of conversions. And you're making those agents much stickier to you, all in all. So again, a relatively small change, right? A small web app that takes a little bit of information and prevents a really wide, a very detailed profile of the consumer, will yield significant benefits. It reduces the conversation with the consumer, yielding better insights as to the actual rating characteristics of the policy, which will result in lower severity and lower frequency. So with that, are there any questions?
Please feel free to unmute your mics or put a chat question in. This is where everyone can not be shy.
Well, again, if there's no questions, I want to give you some time back. Thank you very much for your participation, and look forward to the next one. Thank you.
All right, guys, I thank you. Oh, wait, do have a question. How would such a process work for the situation where a customer accesses a third-party comparator online versus calling an agent?
That's a good question. It's very likely that, a comparator could offer this type of solution, and then send the consumer profile upstream to the carriers so that they can make a better determination of suitability before they respond.
Did that fully answer your question?
I'll unmute. Yeah, it did. So a potential customer is or user of this process could be those 1-800 comparative rater. I don't even know the names of them anymore.
Yeah. Hey, Dale, how are you?
I'm well, thanks, John. Nice seeing you.
Same here. As you can tell, I got a little older since the last time we chatted.
I share your pain.
It's interesting. It's amazing how much insight you can get about the consumer. A third party could do this as well as a front end to and that way, depending on what comes up, right? If it really is a commodity sale and it's a low end auto policy and there's really not a lot of other premium or need, right? Then the agent should take it down through the comparative rater, because at that point it's about price. But we have a consumer database with more than 270 million unique identities, and we've done some queries against it. And that only represents about 15 to 20% of the population. That's one of the other insights, by the way, we can bring is if we can differentiate between the head of household looking for a policy and the 25-year-old looking to get their own policy, so that it's, even though we can identify all exposures in the household, we can also identify whether it's an individual or a household level policy.
Well, I'm also guessing that the direct writers, such as, American Family or State Farm or whatever, they get calls because if you go on Google and you just say auto insurance quote, you're going to get Farmers, you're going to get, Geico, you're going to get American Family, State Farm, whatever. And, the same opportunity is there for them, although many of them probably do something similar already.
You would think so. They really don't. What the differentiator here is to look, when they collect information and they load it into their data stores, most of that is associated with the insurance process. We collect data that's really a very wide spectrum of data. We collect all kinds of attributes about the consumer. When we construct the household, we have enough inference so that we can identify who the consumer is and what their role in the household is. And just a tremendous amount about a consumer's financial position, their hobbies and interests. We bundle this with MLS data, so we can go back and identify if this customer is active, right, in how they trade or buy and sell their home, right? Are they homebodies? Are they stable? Are they regularly, upscaling? Just a lot of inference, that can be given to the agent.
So I guess I'm making the point that the process of auto insurance or personal insurance is pretty much a generic process. It twists a little bit for an independent agent. It twists a little bit more for a 1-800 comparative rater, and it twists, another way for a direct writer.
Exactly. And, and there's rooms for all of them. There's room for all of them. The challenge with a direct writer, and the last statistic we saw, which really wasn't that old, was a large number of policies, in excess of 60 to 65% of requests for policies are started online, but less than 5% are actually closed without the help of an agent or a call center rep. Some of that has to do with back-end systems that don't allow straight through processing. But a lot of it really is, complexity in coverage.
Agreed. Thank you.
Oh, my pleasure. Nice chatting with you, Dale.
Same here.
Any other questions or thoughts? Well, I hope this was meaningful. And again, looking forward to next time.
Yeah, my one last closing statement is if there is some, I mean, we have a plethora of data. I wish we could just go into what we have, but if there is a topic specific to something you would like to understand on how we can help use data, or if there's a topic that you would like to learn more about, we are always looking for new topics to discuss in these,
Right.
how we could present in future talks. So please feel free. I put my email in that chat window. We will follow up with a quick email thanking you guys for attending and sending out a link to our YouTube channel with a rebroadcast of this. But in that, we'll have my email. So if you do have a topic you would like to see in a future conversation, please send it, and we will try to incorporate it into a future topic conversation for another chat. So again, thank you. Hope you get some of your day back and have a good day.
Thank you.
Thank you.
Thanks, everyone.
Thank you.